In the metals quadrant, taking a look at the April gold contract, which is holding in pretty well. Steady volatility and a slowly climbing stock market leaves gold in kind of a holding pattern. Going back to the recent high close of March 11th, gold has moved intraday substantially, but on a closing basis, not very far over those 10 sessions, with the difference from the March 10th close to today only being down about 0.5%, despite new all-time highs being made on March 21st. Gold is up 2 consecutive sessions, but today gold hit a high of 2,260 cents, then dropped 1% from that high by the close. The high today up 1.11% from yesterday's close. The low today, 2168.30, that was down 37 basis points or 1/3 of 1% from yesterday's close. We ended up finishing the day just above the flat line, so we'll call it almost unchanged. So far, speeches from Fed participants, whether governors, whether presidents, or members of the FOMC board, post-FOMC have given us no clues on the pace of rate cuts, other than what Jerome Powell said after the meeting and in the press conference that rate cuts would probably still be appropriate. The data is no help, with durable goods today being stronger, both headline and ex-transportation on a month-over-month basis. House price index slightly lower, coming in negative, and the Conference Board's consumer confidence index lower than last month at 104.7 and lower than forecast. Also, the prior month was revised lower to 104.8, and that may be why the 2-year yield rose today, but not the rest of the curve. And that's the section of the yield curve that gold pays attention to because it is more tied to what the Fed does. So maybe the market is starting to say, and maybe this is the reason gold is holding in, that the Fed isn't going to do anything quickly, but they are likely going to do something. That seems to be what the yield curve is telling us, with the 2-year up 6 basis points and the rest of the curve basically unchanged, and gold basically unchanged.